Hello, everyone, and welcome back to this week's TradeFinder Live. It's so great to be back with you all, especially during trading hours. Love this new format. It is very exciting to just be live with Rob during the actual market and see what's happening in real time, and of course, be able to interact with you all. So thank you for joining us. First and foremost, we do have a disclosure disclaimer that we have to go over for each of our live webinars and live events. Essentially, that's covering that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. Now, this is available on our website, so please feel free to read it in detail there at your leisure, or feel free to take a screenshot of it now if you like. That's the main point to take away from it. All right, overall, that covers off the housekeeping details. I'm pretty sure most of us are aware of that process once we get to, aware of the Q&A process once we get to that portion of the session. We do have a limited time for that, so just know if we don't get to your question, it has nothing to do with the validity. We just only have so much time in these sessions, and Rob's generous enough to already give us the hour of his time to begin with, so please don't take that as an insult or anything along those lines, or any insult to validity to your question, rather. It's just the time constraints, so please take that as in motivation to attend the insiders meeting when there's a 45 Q&A portion with both Rob Roy and Jeff Beamer. So lots and lots of valuable time and features to take advantage of during the insiders meeting. All right, so I'm done rambling. The market seems indecisive and struggling around 520 as going in tomorrow's CPI report. So interested to hear what Rob has to say about what we can expect for this market. And of course, very excited to get this session going and interacting with you all. So without further ado, the man of the hour, Mr. Rob Roy.
Hey, Zach, how are you? Happy Tuesday to you.
Well,
we also the eclipse. Doomsday sayers of what was going to happen, and so it was just a beautiful event, basically, is what it boiled down to. But goodness, you see all the conspiracy things that come around there. I like your shirt, by the way.
Yeah, right back at you.
Yeah, these Nike EWO shirts are great. So talking about the market, you're already spot on with what's going on. We are awaiting that CPI report, which will come out at 8:30 a.m. tomorrow morning. And I am showing the new live hub software. As you can see up in the left-hand corner here, I have a 3-minute chart. That's what I watch intraday. So live charts is really cool. So you can actually watch this move as I speak. And on the 3-minute chart, you can see that we have a bit of an Elliott wave pattern going on. And if we break up above this wave 4 level here, then perhaps we relabel that. So you might see that actually as we start. A thing that concerns me about where we sit right now. Here's 520 up here. So you can see that level where we tried to open above it. A little bit of a gap up from yesterday, but remember we have the futures that go on overnight, and we came back and filled that gap, went dead sideways, and then sold off hard. We've recovered some of that sell-off. As you can see, the bar ticking down as we go. But the first thing that I notice here, and hopefully everybody is aware of this by now, is the fact that we have a zigzag pattern being formed here. So when I click on the tools button, Elliott wave options, and there's the zigzag tool. And so when you look at where we opened and draw a line down through here, and so you can do this intraday live, and it gives you an area there of where the wave B correction would be. So it shades it for you, which is really cool. And then you can see it labels that that's a 54% correction there. And then it gives you these labels here on the target prices from the labeling of the 1, 2, 3, 4, and 5. And then the zigzag pattern is showing us 100% correction down there, which would be below 512. So a little bit of a concern there, I think, with the markets on what could happen. And you can see where it highlights the levels for you there on 0 to A. Remember, the starting point is 0 and then A. And so this is a bit of a downward zigzag. Now, this will become disqualified if we break above where that B wave correction is. So lots of things can happen intraday. But one of the things that is really interesting to show you, because I've told you all this for a long time, is that Elliott waves, zigzags, all the stuff that we talked to you about works intraday as well. So you don't have to just have an end of day chart. You can follow these things throughout the market. And down here at the bottom, there's my DMI, which you all know that I like. And you can see that really it's just, to use Zach's word, indecisive here as the market's trying to figure out what we're going to do tomorrow. But we haven't been able to get back above 520, so you have to be cautious, I think, right now with any long positions. We do have one that the AI identified to show you today. But when you take a look at this pattern, let's watch and see how that plays out intraday. So I'm going to switch back and forth today between the new live version here and the legacy version, because we don't have the crypto data yet available in the live version. And I know that's the big thing going into April 18th. So we'll talk about that. So I'll switch over to the legacy version, but I wanted to show you this. I promised you that I would show it to you. And it's just cool. And then you can see over here notifications. This is where you can come in. This is the social media aspect over on the bottom right here. You can publish your own ideas. People get to vote on them. And that's what makes markets, right? Differences of opinions. When I post the U.S. market update every weekend over on the EWO Yahoo channel, or YouTube channel, I'm always welcoming opposing views. That's what makes markets. If everybody viewed the markets the same way, there'd be no markets. So it's just a community to post your thoughts. And here on the new platform, you can post your ideas. And then all of the people that are subscribing to it can vote on them. And there's rankings. There's all kinds of really cool things. And then at the end, Zach will show you how to post an idea as we post our update for today. You can see that as it looked like we were moving up here towards this B-wave correction, now we're starting to tick back down. I kind of felt like we were going to be home. I mean, you see yesterday, not much happened. And I felt like we might be along those lines today, but a little more volatility today than yesterday, moving into that big CPI report. Now, if the CPI report comes in hot tomorrow, watch out. I think that we may see a bigger correction in the markets and actually possibly some downward trades. The AI has been giving us signals. The bullish signals have been coming down in value. The bearish signals have been coming up. So now we're kind of in that in between where we're only getting one or two that look like they're tradable or worthy of an alert for our subscribers at EWOTrader.com. But I'm going to show you some things that we've done over the last couple of days, one of which was the case study consideration that we looked at last week on Google. I closed that out this morning when Google was up $3.60. It has their cloud event today. And so there was some anticipation that they might say something cool. But with a pop like that, up $3.60, we're going to take that gain. And not too long after that, it erased it. So that's the beauty of having the alert service at EWOTrader.com. How long do you stay into a trade? When do you get out? Here at TradeFinder, we find an idea for you, but then you're on your own to manage it from there. But at EWOTrader.com, we send you out alerts on entries, exits, and any adjustments. And so far, we nailed it. We had a nice gain. We closed it out here on the platform. Perhaps Zach can show you that as well towards the end. But we'll continue to watch these bars as we go through. But getting back down here to the DMI, you can see that really not much is happening here. The ADX is sloping down. So it's certainly not giving any love to this little bounce that we had here. But really, the ADX just moved up a little bit here on the B wave correction to the upside. So I wasn't too excited about that either. But then when you go back and you look at this A wave move down that started at the open today, notice how the ADX went up, got above 40. Gosh, if this is not a perfect example of how the DMI ADX works. So I do encourage people to utilize the live charts. If you don't like 3 minutes, 15 minutes, whatever, pick your favorite chart. But just to show you how this works intraday, you can see how the ADX has moved up here on that move to the downside. It got above 40. You can see the scaling over here on the right. And as soon as we broke back below 40, which are the rules, right, for the DMI, if the ADX gives above 40 and then breaks below it, that's your exit. And if you were short on the open, that would have told you it's time to get out. And perfect timing there as we started the B wave correction to the upside. So those are some of the cool features of this new platform, the intraday Elliott wave. So not only can you have the 5 waves intraday, you get the zigzags intraday. So all this stuff is just really cool. I think this is going to take over technical trading. I really do, because not only does it have all these really neat things from a technical standpoint and all these different tools and stuff, you can click on the buttons. And by the way, if you haven't gone to hub.com and gotten a copy of this, the hell are you waiting on? Go there and get a copy. It's free. It's web-based. There's nothing to download. Play around with it. You might actually like it. So it combines this technical stuff with the social aspect. Gosh, Reddit just went public, and they've got a $10+ billion valuation, and they only have the social media platform of it where you go into the chat rooms and post ideas and stuff. We have all that stuff, or Hub has all that stuff. We have it available to us in addition to a charting platform with live Elliott waves. So I would submit to you that this is way better than what Reddit has. So can you imagine what the valuation of this is going to be in the future? And you can get it for free right now? Crazy if you're not taking advantage of it. And you can just sit here and watch the ticks as they go. And you can see we're kind of rolling over here. We actually have maybe a tiny little zigzag going on right there. So I'm going to go back and bring up the zigzag tool again and see if that plays out. Just this little small one here, right there. And look, it went to, it actually went past that. And now we just had something happen in the market. I don't know what that bar is, but wow, we got to watch that live. Isn't that cool? So forget that zigzag pattern. We'll just go ahead and take that off and exit out of there because that's not valid anymore. And that's what happens when you have the movements here. So down to the B wave. Well, actually, no. I take that back. The small zigzag pattern played out. Look at that. So right there at about a 150% extension there.
Hold, please.
But yeah, we'll see what ends up happening with that move there. But pretty cool stuff here. All right, so I'm going to switch back over to the legacy software to show you rates. You can get the live chart of rates as well. But here's what's going on is we have multiple zigzags within the level here of the TNX. And gosh, I just hope that somewhere in that 4.5 to 4.6 area ends up being the end of the move up in rates. Because if we continue higher from there, then that's just not good for the markets themselves. The VIX is kind of consolidating here around 16. So that's a little bit worrisome as well. Let me switch my screen over here. I forgot to do that. So I'll switch over to, I know Zach's doing 5,000 other things here, but I'll switch the window back over to the legacy version here. And you can see.
I thought that new platform looked so good. I didn't want it to go off the screen.
Yeah, I hear you. Did I switch it over, or are we still on the legacy software? I think we're still. We are on the new platform now? Yep. Okay, cool. Because I've got it on the other screen, so just wanted to make sure what everybody was seeing, so that I'm keeping an eye on whatever just happened with that spike up. I don't know if a Fed governor just spoke or what happened, but something happened to cause that spike up. But the little zigzag worked, which is it's pretty neat. And that again just goes back to all this stuff works intraday. So if you're more of a day trader type, this is what you want, and just follow along with the things that we've been sharing with you over the years. All these technical indicators, you can utilize them intraday. It's the same exact stuff. All the things that we talk about on the intraday charts or the end of day charts work on the intraday charts. All right, so there's that lower trend line. You can see we're above it. Even though we're consolidating, we're still in this trend channel here. So that part's okay. And then we'll want to see if we break out. And I would submit to you, I think it's highly likely we break out of this channel on the VIX tomorrow. I don't know if it's going to be to the upside or the downside, but I think we're going to break out of it tomorrow. The dollar is still cooperating.
You're still on the new platform at the moment?
You just told me I was on the platform, so come on, pay attention.
I think I said you're on the new platform. I might be wrong, but we'll have to go back and check the tapes. We'll have to roll the clips there. But,
yeah, we'll have to go back and see based on that. All right, so I'll go back to the VIX. There's the channel that I was talking about on the VIX. So there's the movement there. And then maybe I heard you wrong. It might be on me. 45 things going on right now, watching the market and trying to chat with everybody. But there's the channel. And what I said was basically, I think that when the CPI report comes out tomorrow, we're going to break one way or the other. If it's a tame report, I think it's back on the rally. We get back above 520, and we may be grinding higher for a bit, back to looking for rate cuts. If that CPI report comes in hot, I think the VIX spikes to the upside, and we start moving down, and we start talking about we're in corrective mode. So I think that CPI report tomorrow is that important. All right, so over to the dollar that we were talking about. There's the fact that we're not in an Elliott wave pattern. We're right here around 104. So we're keying off that level. And then Bitcoin, as I mentioned yesterday with you, Zach, during our EWO Trader Live show. And that's another benefit for our EWO Trader subscribers. We have the live show on Monday. We have the insiders meeting on Thursday nights. So take advantage of the benefits that come along, not to mention all the education that we have available on our website. But there's that triangle that we had on Bitcoin. Now it's pulled back a little bit today, which is normal if you follow triangles. But it didn't give us a follow-through day, at least not yet. You know, we can still wait for the end-of-day print for today's move. But for now, it's pulling back a little bit. But that was a distinct move to attempt an upward breakout. Without the follow-through, it doesn't matter. But oftentimes when you break from a triangle, you move like this, and then you come back and test it. That could be what's going on. But you can't call it a clean upward move yet without the follow-through. So we'll have to keep an eye on that for the rest of the day today. And then what happens by the end-of-day print, which happens overnight, and then see what happens tomorrow as well. But moving there. And then, Zach, I'm sure you were smiling with this because with Ethereum, it was actually outperforming Bitcoin. I know you're a big Ethereum guy, and look at that breakout move. So a huge move there on Ethereum. It did move more percentage-wise than Bitcoin did out of its triangle pattern. It's pulling back a little bit today as well. But the viewpoint is that Ethereum is the place to be. And once we get past April 18th, it's going to be all about Ethereum and not so much about Bitcoin anymore after we get through this halving thing that occurs. So, there's a big move there on Ethereum. Nice breakout move there, but same type of thing. If the end-of-day print isn't higher, and there's still time to go with today's live trade, but if it doesn't break above that, then we're going to have to wait and see. There's a tiny chance of a false breakout. You've heard me talk about that before with triangles, where they'll break one direction, kind of a head fake type thing, and then the big move ends up being the opposite direction. But you usually don't get a head fake with that strong of a breakout. So perhaps we're just more in testing mode, testing the breakout rather than a head fake or a false breakout. You can get a move out of a triangle that will reverse and move back the other way. But as I said, it's not usually this strong. So I would think that we're just kind of consolidating this big, huge move. You can see that we had some separation from the 10-day moving average here on Ethereum. But that was a distinct move to the upside. So pretty interesting stuff going on in the whole crypto world. And I know you got mad at me for saying that I look at Solana, Ethereum, and Bitcoin, and you got mad at me last week for leaving out Cardano. But all of them have the charts that look the same. But the best performer percentage-wise, well, look at that. It's 11% move yesterday on Ethereum. Is the leader of the pack, at least at this point in time. So we'll continue to see how the cryptos play out. So taking a look at some of the other markets, and I will switch back to the live chart here in a few minutes over on the other platform so that we can see what's going on, if there's any follow through for what. The only thing I can think of is that some Fed governor must have come out and said something a little bit more dovish than what we've had for it to move like that. But here's the DIA, and it's struggling at 390, just like SPY is struggling at 520. So same type of scenario here. Just haven't gone anywhere for almost the entire year. We did move up in January, but from February on, the Dow's done absolutely nothing. So we're just sitting here around 390 with a 23% fib correction, which is meaningless. That's just not a strong enough level. I start paying attention when we get to the 38.2% fib level. So 23.6 I don't think is very meaningful. Elliott didn't either. He thought that could be just a continuation. In other words, he wouldn't be real confident of an upside bounce from here, just off the 23% level. He would think more along the lines of, oh, it's just a little bit of a bounce, and that would play out here. His comments on this 390 level, that we came down here and we just bounced up and tested this, and that we could be heading lower. But it is a watch out below. Not quite Katie bar the door. I don't think we're going to have that kind of a correction, because we're still going to be looking towards rate cuts at some point in time. But we may get a little further correction in the markets if we have a hot CPI report tomorrow. I know the Fed will be waiting and talking about the PCE, but they're going to pay attention to that CPI report as well. So looking at the Qs, we take a look there, and same kind of, it's pretty much across the board here that we're all trading right at these support resistance levels. So 520 on the S&P, 390 on the Dow, 440 on the Qs. They're all looking the same. Really not a whole heck of a lot has happened since the beginning of February here, as the market continues to have to reprice when the rate cuts are going to come. So we went from potential in March to a high percentage in June. Now we're pushing out June. Now we're wondering if there are even going to be any rate cuts at all this year. So the market's trying to figure all that out. And if it gets to the point where the market's pretty clear on the fact that we may not have rate cuts till late in the year, if at all, I do think we'll see a bit more of a correction, and that stubborn wave 5 there on the Qs has just continued to hold in. No relabeling there of the 5 back to the 3, which we've been talking about. And just when we thought the IWM was going to lead us with that attempt at a break above 210, it's pulled back and also hanging around. So the IWM, as we chat about a lot, often moves to the beat of its own drummer, but tried to hit 210, came back, and now we're consolidating in the same area it's been since Ashley got up there on the 15th of February and has gone nowhere since. We're exactly where we were back on the 15th of February, and we're now at the 9th of April, and that's on the Russell. You can also identify probably a little bit of a triangle here on the IWM. So something's going to happen here on the IWM. I don't think the ADX would be low enough. Well, it actually is pretty low, lower than I thought. See, we've been working our way down on the ADX, so almost strangle-worthy there. The problem would be that we don't have a big enough move here. We have got the lower end of the mouth of the triangle at 200, the upper end at 210. As a reminder, for a breakout, you measure the width of the mouth of the triangle price-wise. So if we're at a low of 200 and a high of 210, that's a 10-point forecasted move to put on a strangle. And we've had 5 of them in a row that worked out in the volatility strategy at EWOTrader.com. So we had a quiet period there and then have come roaring back with 5 profitable trades in a row. And then you look for a potential here, but the breakout's just not big enough because you want a 10% breakout. In other words, we want 10% of the price level over here on the right. So if we're trading around 205, we'd want a 20-point move, not a 10-point move. So it's not strangle-worthy even if the options were priced for it. But we're going to get about a 10-point move out of the IWM. And once again, we have no idea what direction that could be. But isn't it interesting that it's come down here and holding? So every market that we've looked at is just consolidating around support resistance. So that's the theme for today. Markets are at support resistance. They've been there for a while. And at some point, we're going to get a break. And maybe, just maybe, that CPI report tomorrow is the make or break point. I don't know. We'll wait and see. And then I think it's Friday, I believe, is when the PPI report comes out. I mentioned last month that the spread had tightened where the CPI report was more in line, but the PPI report was a little hotter. That compresses margins, which means that companies are not being able to pass on the increased prices that they're paying at the wholesale level. So if prices go up at the wholesale level and they can pass them on at the retail level, then that's fine. It keeps their profit margins in line. But if they're having to pay more, but they're not able to pass those on, that compresses the profit margin, and that creates problematic scenarios for companies. So lots to talk about today with everything that's going on. And now if we go back and look at some of our previous, let me show a couple international markets here, which we usually do on TradeFinder. We'll look at the EWA for Australia. Our subscribers know we look at the XJO on Thursday nights as well because some of our subscribers actually like to look at that. Same type of thing here, labeled a wave 5, still kind of staying in this trading range, but trying to break out above it. And perhaps that's Australia, if you're not familiar, is resource rich. So with what's been going on with gold, I imagine we're going to get a question on gold before we're done. You can see that we've got this big ascending triangle here. So the trading range is kind of breaking out. We're trying to break out, testing the breakout here. And then we have this wave 5 high here that we have to break above on 25 at 25 if we're going to move higher there. We look at the EWC for Canada and same kind of a scenario here where we had this big, not big, but an ascending triangle. There you go right there. And here's your higher lows at 37, and we've broken above that. So the low here was right around 35.5, so that's a 1.5. So 38.5. So we're right there, and note what's going on, a doji. So that's exactly what is supposed to happen. We moved exactly to the expected breakout point. The whole scenario I just went through with you on measuring the mouth of the triangle, it predicted a 1.5 move. And so from 37 to 38.5 is exactly a 1.5. So we get there. It's done what it's supposed to do out of the triangle. And now we have indecision. If we close here, which we still have time before the close, but if we close here, it's on a perfect doji. So indecision at the exact movement of where the triangle is forecasting. So, gosh, those of you that have been watching us for a while, you're seeing play out today everything we've been talking about, whether it's on the live chart, on the 3-minute chart, or whether these patterns are. So, if you haven't become an alert subscriber at EWOTrader.com, what better time to do it than now when the markets are at an inflection point? It's easy to make money. Everybody makes money when the markets are running up. But what happens when things go through these sideways patterns? We've had great trades from our AI. We just closed out a second bullish trade on AEM today in our AEO portfolio. So we had 2 in a row there. And then the Google trade, as I get to, worked out well. And the timing that we got out was spot on. Stock dropped $3 within an hour after we got out of that this morning. So that's the value of the alert service, is the timing of the entries and the exits, not just picking and holding for a long term. When you have a market like we've had on the S&P that's been going nowhere for months, you have to pick and choose your spots. When the market rallies big, as I said, it's easy. But now that the Mag 7 has calmed down, where's everybody looking to put on their trades and make money? So the first one, I want to show you EWG and INDA first. So let me get through I'm talking as fast as I can, Zach, because I figure we're going to have some questions today. So I'm trying to get all this through so we have time for the Q&A. But looking here through the EWG in Germany, we went exactly to 32 and backed off a little bit. We look at the 10-day moving average here on the German market. You can see we've broken back below it. I don't think anyone would be too upset with a little bit of a correction here in the EWG. It's had one heck of a run since the end of October. But the key level here, if you're watching this and if you do happen to trade this market, is 31. We can stay above 31. I think you can stay long the EWG. But if we break below 31, you got to exit. That's your stop. Because then you have to start thinking about a move back to this previous 3, which is also where that gap is. Look how the previous 3 just intersects that gap perfectly. And that could be where we're headed if this is indeed the end of the Wave 5 move on the EWG. So watch 31 there. And then the INDA, which has just been performing so well, continues to perform well. Now, it is bumming its head. We talked about this last week, that we may have a little bit of resistance here at that previous 5, and that seems to be exactly what's going on. Tiny bit of separation from the 10-day moving average here. If you're along the INDA, you welcome this. You want it to go sideways here and let the 10-day moving average catch up. And the reason for that is if you break above support resistance, major moving average, triangle, etc., and you're already overextended, you're already overbought, it doesn't hold. And so we come back down. So if you're rooting for the INDA, if you're long the INDA or the Nifty, you want to see some consolidation here at 52.5. Let that 10-day moving average catch up, then break above that previous Wave 5. That's when we can have something a little more substantial as far as a potential continued move. And of course, hopefully you've all noticed this. I don't have to identify these for you every single time. You're seeing these. That's the key, is you start to notice these patterns. Right here, there's the zigzag pattern. Look at that. A zigzag within a Wave 5. We often talk about zigzags within a Wave 3, but zigzags happen within Wave 5s as well. And you can see that a perfect right at the 61.8% B wave correction, the 100% extension gets us above that Wave 5 high all the way to nearly 54 there on the INDA. But it has to break above this level. It's finding resistance not only at the Wave 5 high, but exactly at the 61.8% extension. My goodness, Zach. I mean, this is like an Elliott wave Fibonacci class today. Everything is playing out to the rules. Go ahead.
Yeah, no, sorry. I just said 101, just was ad-libbing there. Fibonacci 101.
Oh, yeah. Elliott wave 101. This might be 102. This might be a little bit more advanced with all the other stuff that we're talking about. So it's not only covering the basics, but covering all the more extensive things that we've been talking about. So Goodness, it looks great. All right, so let's look at some of the case study considerations that we've looked at. We did not send this one out as an alert to our alert subscribers at EWO Trader, but we did look at this as a consideration here, and that was back on March 19th. So we moved the chart up to the 19th, and that's where the entry was. We were waiting to see if we can move to a new wave 5 high. We came back down. Same thing here. Nothing's really changed. We've just gone sideways for the week. But if you're following this one, you can stay long right here because we're at the wave 3 high and the 50-day moving average. So we're testing both of those. Now, if we break below this level, if we break below the 50-day moving average and that wave 3, then this becomes a short. Oftentimes I say that, well, you just get out. But that's one of the beauties of Elliott wave, is if the wave 5 ends, you're going back to the previous 4. So if we break below that level right there, then you have a nice short trade here on ROL, and we may flip that one because there's nothing to stop it if it breaks underneath that 50-day moving average before going back to the previous 4. Then we also looked at LRN back over here on the 26th. So that was the following week. So let's go back here to the 26th of March. So right there is when we were looking at this one and seeing if we could hold this wave 3 high right in through that area, because if we could continue to hold that, we had a potential move higher, and we haven't. We've broken below this one. So this one, we're waiting to see. This could be a flip too. So you're already finding that if the market does react negatively to that CPI report tomorrow, now you have a couple of good short candidates because this is going to come back down to 55. And then we have that, if things really get ugly, we have this gap down here that awaits the potential move for LRN. But for now, 60 is key. Can we hold 60? You can stay long here as long as we hold 60. But if we break that, we're going to see 55 in a heartbeat on that. So it's moving down today, and it's right there at 60. So let's see how that plays out as we continue into next week or through the end of this week. It's still only Tuesday. Gosh, so much has happened this week. It seems like we're on Thursday night. And then, as I mentioned on Google, I thought I would just go ahead and show you the alert just to prove to you that everything that I say is documented on our website. So I'm going to move over here to the actual alert here. And there you go. So that's what happened with us on Google. What did you do? Are you still in it? Are you following it? Did you take advantage of it? Now, note that this is in the speculative trades portfolio. And the reason that I put it there is because that came off of my search before in being infused with AI. And so if it's not in the AI portfolio, then put it in the speculative portfolio. So it still followed all of the rules that I used before. We added all the 300 plus data points with AI. But this one worked out extremely well. You can see our entry price was $525 back on the 27th of March. Here's the chart. Here's what we were looking for. Now you're going to see, and this comes up, and I've talked about this in Trader Tips on YouTube, that we exited this before we hit our target. 165 was the target. And then, as you see on the exit, we closed it out here. Bring up Google before we hit 165 on today's move. And the reason for that, there you go. There's that big gap to the upside there. For one reason, that's a gap. So this is what it looked like when we closed it out. We had the gap up. So we had an IV infusion. We're at 160, not 165. So why did we close that out? Well, we closed it out. I'll switch my screen back again. Ooh, lots of things to remember here. So we'll
screen switching. While you're doing that, Rob, I just wanted to pass through a question that's relevant to what you're discussing at this moment. And Sanders says, I missed the exit on Goog and it had dropped significantly when I was able to react, still holding the recommended exit, waiting for a possible rebound. Is this wise, or should I exit at a lower level?
Well, we exited, and I sent the exit out this morning when it popped up like that for two reasons. One, it gapped up. There's the chart. The other reason is when you get a gap up like that in a big move, you have an IV infusion. They also have the cloud meeting today. Certainly, people will be waiting to see if Google comes out with anything really cool and new. So if you haven't exited yet, if you've missed the exit, then perhaps you take the risk of seeing if they say anything interesting. I would submit that if we have a bad CPI report and the market corrects, probably everything's going down with it, even the tech stocks and possibly even Google. But if they come out with we got this really new cool thing here, you could get a rebound in the afternoon. So there was a gap up and a big move higher in anticipation of that conference, and then a back off as the market backed off a little bit. As they're waiting to see what happens. So that's where the timing comes in, where you want to take advantage of those things when you can. But the target is 165. You might have to wait a little longer to get there. But you could also see a resurgence. Maybe we end up 10 points at the end of the day. Who knows? So that's a difficult one as far as holding on. But from a technical standpoint, because we can't give individual investment advice, but from a technical standpoint, as long as you stay above 155, you're technically still long Google. We just chose to go ahead and take that gain, and then I'll go back and show you how nice the gain was here as I switch back again. So lots of, gosh, I feel like you, Zach, with all this behind-the-scenes stuff that you got to do here with multitasking.
It takes the bar one.
Yeah, exactly. So 76% we got in 12 days. We'll take that every time, even though we didn't hit our price target. Isn't that amazing? 76%, and you didn't even hit the price target yet. So, yeah, we're going to take that, and we're going to take those advantages, and that's why we got the extra juice in the premium. Look at that, 525 actual fill to get in, and 925 was an actual fill price to get out. I followed this one personally myself, so I know that this is exactly what happened. And so there we go. And if you haven't been with us for a while, anytime I see Google show up, whether it's on my search or the AI or whatever, I'm going to trade Google. It's my number one favorite stock. It's just Elliott wave. It's dialed into Elliott wave. I don't really know the answer why. I know Elliott wave in general rules, the more liquid an issue is, and Google's certainly very liquid. The options are very liquid. The more accurate Elliott wave performs. But when I see Google over the years, it's been my number one stock, if you haven't heard that before. So when I see it show up on the search, I'm going to trade it. And that's what happened. And so that was a great exit there on Google. Whew, holy cow. Let me switch back over here to the live software. Give me a second, Zach. And then we will go through and
hold, please.
Man, this hour has flown by. But here is the 3-minute chart of. I'll switch it over here in just a second. I'm coming, I promise. I'm just playing around with some of the tools now. All right, so
all right. Going anywhere?
Everybody's got to hang out and wait. That's cool.
Well, within reason, of course.
Yeah.
Well, in the meantime, just want to remind everyone that we do have the display coming up here soon of the new platform. I'll show how to post Rob's idea once we identify what that is going to be and just give a quick overall demo, just a succinct rundown. Won't take too much time. but maybe as a fresher up for anyone that might be just signing up or getting familiar with the new platform. I also want to say for all those watching us on YouTube, we really appreciate you taking the time to join live. It goes a long way for the algorithm. And if you could just take 2 seconds to hit that subscribe and notifications button as well, as you can see on the screen there that Ryan so kindly just popped up, it will notify you as soon as we have any live events going on. So you'll never have to worry about missing anything. And we are aiming to head towards these social platforms in the future anyhow. So ideally, that's where we want everyone to be.
Yeah, so there's the chart. You should be able to see that on your screen now. RY is going to be our case study consideration for tonight. This one was from the AI, and as I said, there's very few signals. So there you go. And if you take a look at clearly, I think you can see the zigzag pattern set up here on RY. So I'm just not going to go through the whole process here, just in an effort to save time, because clearly running late. And look, there you go with the potential movements here. And so the expectation would be, look at the DMI down at the bottom, how it's setting up for the extension all the way up here. And the shadowed area there gives you the potential price target. And so there's where we could go on RY. So potentially as high as 108 on RY. That also is the AI target. So we'll see how that plays out. And then you can see over here that I have it on the daily, but you just click on that. And if you want to come back down, if you like the 3-minute charts that I've been showing you, there it is. So kind of moving sideways here on the RY. And then we can get the Elliott wave count on there. It needs enough data to show you. And we had a nice move yesterday, and just been kind of trading sideways today. But there's where the open was before. So usually when you have a big move like that, you're going to go up back up and retest that. So I do want to switch back over here to the S&P real quick, just so that we can see if we've had any follow through. We haven't to that move. All right. With that, Zach, let's go ahead and jump into some questions and symbols, and then we'll finish off with you showing them how to post RY, post an ID on the platform.
Okay, so you want to do that at the end?
Yeah, we'll do it at the end. Let's take some questions first.
Sure. No worries. All right, we'll go over to Musa, M-U-S-A for Will.
M-U-S-A. Murphy. Well, that should be looking pretty good. Let me switch back to the daily chart here. It's had a nice rebound here. Let's see. When it says insufficient data, that happens when you're using the 3-minute chart. So all you do is just condense the chart. And then once it has enough data, then you can see the EW, the Elliott wave kicks in, and little bit of a surprising move down today. I'm assuming this is the gas stations, Murphy Oil. Oil has been hot, so that's been a good place to be. So let's switch back over to the daily chart here, and that looks a little more normal here. Nice consolidation here in the wave 3. I don't know if that's enough of a pullback here, but gosh, that move off of 350 certainly looks interesting. So let's take a look real quick and see if that's enough of a correction for a zigzag here. Don't know. Not quite. Is it 30%? So you would be looking at this 61.8% extension level. We actually have a crossover there between the negative directional indicator and the positive. So the negative's on top. So I think I would have to wait and see a break. We tried to break that wave A high here, and we didn't do it. So we need to see that break move to the upside, and if it does, then you could go long. But I think we need to see a break back above 425 to go long this. And if it breaks below 400, which I really don't see happening, but if it were to, then you would exit. But you can stay long as it's above 400, but you get more excited if it can break above 425. So we're kind of in a trading range here on MUSA.
Very well. I was just replying to a comment in the chat, and there's been some others that have reassured that it's been a bit blurry for them on Zoom. We apologize that it's been blurry on Zoom. However, the resolution has been crystal clear on all the other platforms we're currently on. And so our goal is to obviously have the optimal stream for you and eventually get everyone over to YouTube, which will provide the best streaming support and overall quality for the session. So we'll continue to provide updates as we transition into that, but that's just something to always keep in mind. If the screen just is a bit blurry on Zoom, we can always have this on YouTube, which is obviously the main platform for holding live streaming. So anyhow, we'll go over to Qualcomm, see what's going on with Qualcomm for SP.
Yeah, as I bring that up, I'll give you some kudos because you've been shouting that from the rooftops in our management meetings, Zach, about the issues with Zoom. So just furthers your point with people saying that it's a little more blurry there. I know you'd be happy if we just moved away from it. So perhaps that's where things will go. Looks like we might have a zigzag here on Qualcomm. A big one, though. If you go back all the way to the start of and I like that, when you start the entire pattern, oh man, only 30. Well, that's pretty close to the 38.2% level. But the problem with that is, well, there's a good and bad here. The problem with it is you run into resistance at 61.8 because that's the target price, right? When you have a 38% V-wave correction, you're looking for 100% extension. It's exactly what happened. And then you can see that the extended level up there towards 100 is where this could go if it can hold here and break higher. We have a small zigzag right there in the right after the wave 3. We're technically still in the wave 3. We haven't taken out that wave 3 high, so the 3 hasn't moved over. But right there within the zigzag, then perhaps we have another one. Go real quick and see if that actually right through here. It's the exact same level. Isn't that interesting? The small zigzag has the exact same level as the big one, which brings us to the same target there. So that's a positive. You have two patterns here, the big zigzag and the smaller, which means this is a complex C wave because it has a zigzag within the C wave, are both giving us a target price around 190. However, just for further qualification, again, we have the CPI report looming tomorrow. We have to take out this wave 3 high here first. If we take that out, then I think we're going to 190 on Qualcomm. But it's got to do it first, so don't jump the gun here. I know it's great with two zigzag patterns. The DMI down here at the bottom is very constructive. That's what you want to see. So in a decent market, if we have a tame CPI report tomorrow, I think you have a great upside trade there. But be patient right now in front of tomorrow and let it break that wave 3 high first. If it does, then yeah, off and running. That was a really good one to look at there.
Agreed. Yeah, that was one we hadn't looked at in a little bit too. So it was good to see that chart come up. Let's go ahead and check out CCL.
Carnival. I mentioned this last summer on a cruise that they were just booked out. They're booked out for years. Everybody was so chomping at the bit to go cruising. But note, we are in a qualified 5 wave to the downside pattern. The wave 4 at 72.97% there. So we almost disqualified this downward move. And I would say holding right down here in this area around 15 is key. If we can hold 15, maybe we get a bounce. We're getting ready to go into peak cruising season again. We're moving into spring, summer on the horizon. That could be a good reflex trade there. But if we break this wave 3 low, so if we break below 15, then you have to respect this wave 5 target down here around 14. But if we can hold 15, perhaps we get another reflex bounce back to the upside there. So this one is pretty easy from a risk to reward standpoint. You can take a shot long. It'd be a little on the speculative side because you're going against the 5-wave pattern. But you could take a shot at perhaps bouncing off of this 15 level. But if it breaks below 15, then it becomes a short because then there's nothing there until we hit that wave 5 target at 14. So watch 15 very closely on Carnival. Let's do one more, Zach, and then we'll move into you can post our RY alert so everybody can see how to do that, how to post an idea.
Absolutely. And I was going to say you read my mind. Great minds think alike, because I was just about to propose that same offer. I was answering another question in the chat about when choosing Elliott wave tools, it doesn't show Elliott wave, but allows you to draw the Elliott wave. I just want to ensure that all those out there know there's two different tools that you might be getting mixed up with within the tools there, where there's the Elliott wave
right
count, and there's the Rob, you don't mind showing that would be great. Yeah.
Right there, the main Elliott wave tool is one of the big buttons right here over on the left-hand screen. See it's highlighted? All you have to do is hit that and it turns on the Elliott wave. Now what I'm doing is I'm going to the tools to draw the zigzag pattern. So, some of you have talked about
the tool was exclusive from that. Sorry, I didn't mean to talk over you, Rob, but just wanted to highlight that.
Yeah, it's totally different. Different spot. So the primary Elliott wave, which will work in the live charts as well as the end-of-day charts, is just this button right here. So what they've done is that you have kind of your favorites. See how it's under favorites? The favorites of the indicators that you want to look at are all included right there. So you just add your favorites on, and then you can highlight them and put them on. There's CMF, CCI, the ones you hear me talking about all the time. So the main Elliott wave button is here. What you're seeing me do is go up to Tools and go into the zigzag extension, which is under the Elliott wave options. So that's when you go into further Elliott wave tools. But the primary Elliott wave button is just right there. Anyway, let's move on. Next signal.
Yeah, no worries. We'll be conscious of everyone's time. We appreciate the hour you've allotted already, so we'll wrap things up as quick as we can. We have a question from Manuel on Amazon double top from 713.21 and downsloping trend from 713.21.
This is a good one to finish on because I'm waiting for somebody to ask about Amazon again because of this amazing run that it's been on. You can see that the ADX is still moving higher. There's still separation between the two directional indicators. Technically, that's still long, but note how the upper line there is curving down a bit. So I think you have to be cognizant of that. If the ADX breaks above the positive directional indicator, that's kind of a warning signal. That's like a yellow caution flag. It doesn't necessarily mean you're done because that positive directional indicator, the two directional indicators are way more responsive to day-to-day movements in the markets than the ADX. The ADX is a little slower. It's a bit more of a lagging indicator. So that's why you watch both. But if the positive directional indicator breaks below there, again, that's warning as far as a potential pullback. But if the ADX stays strong, that positive directional indicator can move back up. You're seeing a little tick up in the negative one as well. So it would kind of feel along the lines of the comment that maybe this is getting a little tired. We had all this consolidation here at 180, and we've broken above it in this wave 3. So it's been a pretty long wave 3 going all the way back to, December is when this took off. So it might be a little tired in this wave 3. I would agree with that. But from a pure technical standpoint, based on where we are with the DMI, if we stay above 180, I think you have to stay long Amazon. But if it breaks below 180, that's when it becomes likely in corrective mode, perhaps getting into the wave 4, et cetera. And I don't know. There's a lot of consolidation there between 170 and 180. So from that standpoint, I don't know that it's a short candidate. I think you just exit the long at 180. Some of those that we've shown, if they broke below support, then there would be big gaps down, and you can flip them from being long to short and take advantage of that. And that's just a great way if you put on a long position and it doesn't work out right. You take the loss there, but you don't have to actually walk away from the stock. If you have a breakdown, the way Elliott wave works is if the existing pattern becomes disqualified, the next pattern has an even higher percentage chance of being right. So why wouldn't you want to do that? So there were a couple that we showed that could go from being long to short candidates, again, depending on what happens tomorrow. I don't think this is one of those, though. I think there's too much support between 170 and 180. I think you stay long if it stays above 180. You just exit the long if it breaks below 180 and then wait and see. Because they would have to come all the way down here below 170, and then we start talking about that gap. But that's a ways away. Anyway, it's been really strong. I've just been surprised we haven't had questions on Amazon here for the last few weeks. So kudos to whoever asked that. All right, Zach, I'll turn it over to you and show the folks how they can go post an idea as we post RY with that potential price target. I'll give you the price target again of where RY can go. So we're looking up here at, let's go with, it could go all the way up to 108. So let's use 108 as the target. I know the C wave is just under the 110 level. Let's be a touch more conservative and just say 108 on RY. And that should occur by June, so 2 months.
Okay, very well. I just want to confirm that my screen is visible at the moment.
It is.
There we go. It is. Okay, we're good to go. So this is a jumping off point, a menu view of everything that this platform has to offer. Again, not going to spend a whole heap of time because I know we're always running a bit late here, or at least running a bit late on this session, rather. So just as a quick rundown, I think one of the coolest features to first explore is the themes, because if you're really just wondering about where you can get a macro view of this platform and get an understanding of how everything is so organized and categorized to your preference on what you might be in this world of investing. So if it's something in regards to an artificial intelligence stock or just in that sector, you can just click on these general themes and get directed to ideas around that. But again, what Rob was mentioning before is the community aspect. My feed here is where you can interact with everyone else within the community that shares their ideas. You can share your opposing or confirming idea with them. And again, just overall be able to keep a running track log of your ideas, track your progression, and it's not real money that you're putting on the line. It's kind of a form of paper trading and a great practice skill to see a simulation before actually doing it in real life. So anyhow, there will be more tutorials to come.
If I could just jump in for a second, because you made two really good points that I'd like to highlight. One, the personalization of the themes that you put through there. And then on top of that, where you were talking about the paper trading aspect, a lot of the brokers have paper trading now. So add that to the list of things that the new software does, in addition to the Elliott wave stuff that we've shown you, the tools, the themes, the posting of ideas. On top of that, you can paper trade. So goodness, the list of benefits, we've been talking about this for so long on how cool this was going to be. And I think you just highlighted two really important ones that I hadn't really mentioned. So sorry, I didn't mean to interrupt you. I just wanted to further emphasize those points because I thought they were really good. Okay.
No, absolutely. No worries at all. I'm glad you added that in there. So we'll wrap up this session by showing you how to post an idea or a post. So it's important to make the distinction here. As you can see, I just clicked on this little light bulb, which is our ideas tab. And so we have the option to create a new idea here. And if we're going to go with an idea, that's essentially what Rob was just referring to as you're confident that this is something you would want to see play out in that paper trading aspect. So you would enter everything the same you would as for a real contract and with a real brokerage. However, if you feel you're a bit more in the speculative category, you're not quite sure if you're ready to commit to a full target price, ROI, anything along those lines, then you might want to just send it out there as a post, as you're still waiting some things to play out. And then maybe at that point, you'll be at a level of comfort to transition into creating a full idea. So with the idea, there will be, the accountability of your trust rank. So if you don't hit your target price or close to it within that amount of time, that will be factored in. And so obviously it strives to improve the overall authenticity of good ideas and to hold yourself accountable as well as to all of the technical analysis that might be required, things that might make you learn from the prior idea or post rather. So anyhow, what do we want to go with the name for this one, Rob?
RY breaking above resistance from the beginning of the, I know your level. So RI breaking above resistance to move higher. Just to make sure I'm clear, RY, not RI. I know sometimes I don't enunciate real well.
No, I appreciate that, but no, we got it there. Sorry, and you mentioned the target price, but I'm short-term memory loss.
108. Yeah.
Where you said 2 months?
2 months.
All right, so this is another thing to highlight here. As you can see, they have it broken down into intervals of 1 week, 2 weeks, 3 weeks, jumps up to 1 month, 3/4, half a year, and the full year. If you need something that's different from that or unique to that, you can just hit custom, and then you can go down to the very specific day that you might have in mind. So here we are on April 9th. We'll go 2 months out to June 9th, and that is a Sunday. I usually like to always have it on a market day, so we'll do the 10th. And I will come back to add the overall good stuff, the juicy stuff, once we wrap up this session. So back over to you, Rob, and thank you all for joining us for this session. I really, really appreciate those that take the time to attend live. It's one, a pleasure to interact with you all live, and two, it's just an overall learning process for me between having your wealth of wisdom, Mr. Roy, and also learning from our informed subscriber base. It's always a pleasure to see those questions come through and makes me think of things that I previously hadn't. So I'll pass over to you. I can turn into a Hallmark story if I keep going. So I'll just say thank you all and look forward to the next time.
Yeah, thanks, everybody. I feel like this was a fantastic show. I hope everybody else feels that way as well. We got to highlight the new platform as we promised, show you some of the really cool features. I think that took a little extra time. We'll get to the point where we won't be using the legacy software at all. We welcome the crypto data that'll be available soon on the live platform, but so many features to fool around and play with in the meantime. And watching the charts unveil live was really cool today, especially with the movements that we had where that small zigzag ended up popping right while we were watching it. So I didn't get any better than that. So really enjoyed the session. I second what Zach said. Thanks everybody for taking your valuable time to spend with us, and we hope you found it informative and educational. And if you haven't heard me say it 18 times today, watch that CPI report in the morning. It's going to affect the markets, in my opinion. Take care, everybody.
Sure.